Hey, all right. What's going on, everybody? It's Monday. Get it done again. It's a little bit of earnings this week, and we got some auctions in the front end. Got the 10-year, and we're gonna get a little bit of economic data. So we could see a hurry up and wait throughout the morning into tomorrow with this CPI print. It's gonna be something that really we want to focus on. Whether or not we're gonna sit in the middle and wait for tomorrow or start the push. And then, we got the 10-year today, we got the 30-year tomorrow. They're the big ones. So right now, that's what the markets are doing. We're just kind of hanging out. NASDAQ down 0.75%, with the S&P neck to neck with it at 0.5%, and then small caps down the least at just a measly 0.25%. Hong Kong flat, Europe just slightly positive. Japan took off running. I think I shared a picture of that. There was quite a bit of comments about Powell, this indictment. It seems to be based on comments he made back in June to the House or the Senate. It's nothing, right? There's nothing there. It's just another tactic trying to pressure him to cut rates, which isn't going to get it done. A lot of Fed speakers today, not really expecting anything out of it. They're just chipping teeth. Tomorrow is going to be the big deal. If you look at the numbers, it's not like we're far off, right? This is the only thing that makes me think we might not get that hurry up and wait that we're looking for. Yes, in front of data like this, CPI, PPI, that sort of thing, a lot of times the markets will go sideways because, why front run big data? But if the forecast is that there's really no change to the data and it's just same old, then who cares? So if the market runs on that theory, then we won't go sideways. We'll go ahead and break out, break down. We'll do something else. And if the numbers come in and they actually are divergent from what we're seeing here, then the market's going to have to reprice that. So we just got to keep our eye on the range. GTFO, as always, get out of the box before we do something else. And if we stay in the box, then the hurry up and wait scenario was right. If we get out of the box, fine. Take the loss, play the reversal, and run it till it breaks. There was some comments about capping credit card interest at 10%. We'll see if the banks are going to kick off their earnings. We'll see if they mention that comment at all. And comments are easy to make. Backing it up with any sort of follow through is completely different. So I don't think they could push that through even if they wanted to. But it sounds good, right? I got young friends with credit cards that are paying just crazy interest. One of them is 27 or 29%. Can you imagine? It's just madness. All right, so if we look at March, they're still pricing in a pause. January is a done deal, right? It's at 95%. They would need a significant unwind to flip that around. And even though to change it now would be bullish to consider we actually get a rate cut, that's always bullish, right? To consider a rate cut. If we did it now, if they started to price that in, I think the markets would freak out. I don't think it'd be as bullish as we'd want it to be. But it shouldn't happen, right? Stability and um, clear communications and no shock and awe is one of the hallmarks of the Fed system. It's communications is their biggest downfall. They've been communicating no cut for January. They changed that now this late. I think the markets would not like it. So it's pretty much a done deal for January that we're not going to get a cut and that we shouldn't, right? It's just going to be a pause. But the messaging in January is going to be really important for what comes next down the curve. So what he says and how he says it, or what tie he's wearing and all the other silly little things that people focus on. I see Starlink is having some issues. They got those new satellites put out. What day was that? Yeah, he just got approval for 15,000 Gen 2 Starlink satellites. But right now he's getting jammed across Iran, so he's having some troubles. And I guess that United Health CEO getting shot didn't stop him from, continuing with their aggressive tactics. Good luck. Yeah, you too. I hope you had a good weekend. Did you get anything done? Looking at the overnight volume, we got 88,000. The kind of sweet spot is 55 to 60,000. It shows participation less than say 50, and it makes us wonder why they sitting out. Why didn't they participate? Maybe there's a market that didn't open. You get above 65, 70,000, and then you're on the other side of that wondering, wow, what were they trading last night? What caused such a surge in activity? There definitely was a surge in activity. From here, it's kind of hard to see if it was at a particular price level. We crossed through the 10. That might have a little bit to do with it, but we'd want to look at it on the profile and see at what price level they were hitting at. You could bring up something like TPO charts too, footprint charts, try to really narrow down in the time frame what kind of uh, flow we were getting and when. But that's a real heavy level of participation. Remember, with this indicator, it really kicked off at midnight, so it doesn't capture the Asian session very much. More of like the Asian close and the European open. You could probably find one that runs all night. This was what I had found back in the day when I was still kind of learning to code. I just used an existing indicator and modified it. So to me, it's good enough, but it does miss out on pretty much the whole Asian session. Still, they ramped up on the European Open. That's what at least stopped the bleeding. And when we get into the European close today, we need to be mindful that Europe is what stopped us from falling from the Asian session. And when Europe interrupts the market or is driving the market and then Europe closes, we can change from what we were doing to doing something else. So if we start to rally or continue this push off of the low, trying to mean revert back into yesterday's high or at least the higher part of yesterday, and then Europe closes, that could kick the legs out from underneath the market. So we'll see how it goes. Just keep your eye on Europe's close at this point. Make sure that it doesn't unwind anything. We're dancing around the 0 gamma. We're underneath the 4, and we're underneath the volatility trigger. Now we're on the line of gamma, right? Don't get hung up on a 1 or 2, 5, 10 points above or below 0 gamma. That's not the point. When we're looking to see what sort of regime we're in, or as Volland says, what sort of paradigm we're playing, these 10 points above or below the 0 gamma line are not going to be the end all be all. If we were firmly heavily below, we would expect them to sell into selling and buy into buying, because that's what we would do in a negative gamma environment. And when we're above, then we expect them to sell into strength and buy into weakness. Generally speaking, right? That's the sort of behavior we should see. But we're at the line, crossing back and forth, and they're not going to just keep flipping the script back and forth between those two paradigms. They're just going to hang out and wait, right? And manage their things in another way. We are testing that 3-week moving average. This other white line down here just above 69.50. And below that, we got the 20-day moving average. If you look at it out here on the daily, I've got that little wedge drawn. Not sure where that wedge started. If you look at the end here, thought maybe it was a Linreg line, but it's not. Just get rid of that. The 20 period daily moving average is the midpoint of this run. 69.32 cog line, basically. It's close enough, right? If we get underneath that midpoint or we get underneath that 20, then we're going to look to challenge this low, and you might as well just call it the 50. If we get that close, might as well take it. There is a bit of a trend line there, but I think it has a lot less value than the 20 and the halfback and the 50. So of course, if we do get underneath 68.50 or the 50-day moving average, either one of those, then 6,800 and a 67.50 come on the table, and this low back here. Right now, we're just inside day. After getting outside of yesterday's range, we came back in again. That's what we need to resolve, whether or not we're going to keep it. All things considered, having a low start on a Monday at the high of a range like this, to me, is preferred. I'd rather, fade and open low on a Monday than gap up and open high on a Monday. At least when we're sitting at the top of a regime like this. All right. Generally speaking, if we get to one edge early enough, we can get to the other edge by the end of the day. It doesn't show the line crossing all the way through. It shows the line starting at midnight, but really that line extended all night, right? So we got to the line relatively early last night, got underneath it, but we didn't make it to the other line. some of this could be attributed to the way we opened, right? And how the indicator was it was kind of manipulated a little bit. Depending on which platform you use, if you're on TradingView or Thinkorswim, one of them uses Friday's close, well, the previous day's close, and the other one uses where we open on Sunday night at 6 o'clock. So that would be right there. I thought so. Thinkorswim is using this open, and that little bit of a gap up actually causes us to miss because it moved everything up. If it hadn't have done that, if it was using Friday's close, then the bottom here tagged that yellow line because the yellow line would have been higher. Everything would have been in place, right? This top end here, 69.70, that would have been the bottom of this channel. And this stopping point would have been this line here. So, when it comes to indicators, there's always a little bit of reading into things. And I'm fairly confident if I brought that up on TradingView that it would look like we hit the bottom and we rejected off of this red line underneath it. But we'll play what we got here. We got the one side early enough. If we get back above 69.75, this ADR half, the other side is on the table. This doesn't make us bullish. It doesn't change our bias on the day. This is more wave function than anything else. It's what price does. We went down, now we got to go up. It's just what we do, right? So going up to that other side would not be bullish. It would just be a part of the wave. If we fail to keep above this level, say we wick up, just kind of dance around the line and then fall back down again, then it's game on. We're going to look to breach this low and continue lower. That should get us down into Wednesday night, Thursday morning lows. 69.32 cog line. And then from there, we can check last week's low the whole week. Today's floor pivot higher than yesterday's floor pivot. That's bullish. This is today's. That's yesterday's. That's bullish. Price opened above it. That's also bullish. Then we broke it. We're underneath it. We don't have an MDP. And we're so far below it, we now have to worry about S&R levels. This lower floor pivot is the weekly floor pivot. That one opened higher than last week's floor pivot. It's bullish. Price opened above it. That's also bullish, but we're underneath it. Generally speaking, we're bearish underneath that and we're bullish above that. All right, we've breached S1, but we didn't even get close to S2. Now, it could be that we still get down there and get it done, but the fact that we stalled out and didn't continue that move to the downside kind of implies that we're not going to. So that's a really good setup, by the way. If we do get negative again this morning, that's a really good setup. You could be patient, right? I guess I like shorting off the highs myself, but whatever. Once this rolls over, if we do start heading back the other way, this distance right here, that's a really good trade. It's about 20 points, 69.50 to 69.30. If we break that low, we're going to that, right? That's the way it works. That's going to be a really nice play. If we go back down, I'm not a big fan of shorting from the lows. I really don't like to wait for, for price to go all the way down there and then break the line and then decide, it's a good time to get in. No. But you play it how you want, right? Destination trading 101. If this is the goal, then you trade that how you see fit. You want to roll it off the high, do that. You want to trade it on the breach of the midpoint of these two, fine. Otherwise, break the low, fine, whatever, right? Maybe we get a Busby off the bottom of that. You do you. Destination trading 69.32 cog line. If we start to go back down again, there's no reason to think we're even going to do that. We're back above S1. We're back inside yesterday's range. We should keep that, right? Bare minimum, we hit one ADR early. We should go to the other side by the end of the day. That puts us back in the 7,000 range by the end of the day. So I'm not bearish. I'm just saying if we break that low, then 69.32 is a really good play. I like it. All right, last week we had a really nice distribution, but it was broken up into two distinct areas, 69.90 and 69.50-ish, 69.60. Right? It's that double distribution, but they're almost inside the value area together. I bet if we had just a little more data on that week, then the value area high could have come up a little, and then it would have been more of a unique distribution. Because you don't see that very often. We'll take it. So if we do make a run to the upside, 69.92 cog line is going to be an issue. We're hanging out here in this 20-point range. It's not supposed to be a support or resistance, more of just an area where price is going to slow down. We should see lower volumes, lower volatility, like a calm in the center of a storm. And then if we get out of the value area low to the downside, it should be game on, right? Get to the round number and then to the 50. We did breach it, but I mean, it's worth putting it back on the radar. 68.80. We cut down into this and turned it around and came back out, but we didn't digest through there. It's hard to say if there's still anything left down here. Shouldn't be. We passed completely through it, but I would keep that level on the radar anyways. 68.80 if we do happen to get down into that zone. Ten-day, 30-minute volume profile in TPO. The TPO is a really nice looking chart. Looks like one of those cartoon uh, spaceships, right? The alien spaceship just turned on its side. Really nice profile. The volume profile looks like trash. Just nothing here. We're going to continue to work on moving this point of control. Right now, default 69.90 looks like that's where we're headed. Yeah, right. Abstract. Hey, it's that psychology thing, right? So let's see if that's where we end up going. There's no reason to think we're going to go anywhere else unless we hang out at a new spot and build it out really fast. And I mean, we don't have it. So you're basically just trying to guess. And I don't like guessing. So 69.90 seems like that's where it's going to be. I'd prefer to be back above that level by the time that point of control gets up there, so we don't have to fight it. But we're going to have to fight that level either way because we've already got work done there. Right? It's like jumping the curb. I'd rather jump the curb than jump a wall, but either way, we're going to have to get through it at some point. Probably should see it up there Tuesday afternoon or into Wednesday. We took out that Wednesday VPOC on Friday, and now we've got a point of control of interest. This isn't a VPOC. I'm going to have to rename this one because we did hit it. We opened up Sunday night and then we fell through this level. So technically, it's not a VPOC, right? It's just a POC. But I think this one has some merit to it, and we want to keep it on the radar anyways. You know, the textbooks will tell you to keep that line, the value area high and low and point of control, and shoot them across into today's trading every day. It says that, right? Do it every day. I don't do it every day. I've got enough pivots. I don't need it. But when there's something of value or something of interest, well, then I'm going to carry it forward. That one has merit. That one has interest. And that's because when we just wicked through it just at the open last night. And as far as I'm concerned, it's basically untouched, basically. But we can't call it untouched because obviously it's been touched, right? Do you need it? No. It's right at the 7,000 level anyways. It's on your radar. It's not like you wouldn't be aware of a key area there. So you don't technically need it, but I'm going to put it on there. If we can get out of the value area high, this 69.75, that'll be a nice target, 25 points to the upside. I don't like it as much as that downside target we were talking about earlier on the breakdown, but it'll get it done. The RTH open from Friday, I think, is still giving us some trouble. We're going to have to get through that. Yeah, that's what we're fighting against. Here and here. So get back through the RTH open of Friday. That should give us a shot at the point of control from Friday. Yeah, you like it. RTH open is a powerful pivot. Just a lot of people sleep on that one. All right, we did not close inside the box on Friday. Now with holidays and everything else and this triple witching squished broken week, if we were to do a count, it's probably going to be a little off. But we're supposed to close inside these boxes 7 out of 10 weeks. Call it 70% of the time, right? It's a one standard deviation, so it's like 68 point blah blah blah. Just round up to 70%. And easy math says 7 out of 10 weeks. So if you was to count back, and I only use full weeks, not short weeks, and I don't use any of them that are broken like this one. So if you count back 10 weeks and skip holidays and broken links, you should find that price closed inside that box 7 out of those 10. And usually the way it goes in the options world, when things are running good, you're running your high percentage number. So for us, that would be staying in the box. But when it starts to break down and we start to fail, and this is true for all the option statistics, whatever it happens to be, when we are starting to move into the other side, the fail rate side, you'll find consistent and consecutive fail statistics. Right? So like when you break the box once in a while, yeah, fine, and we're supposed to break the box once in a while. But if you start consistently failing to close inside the box over and over and over again, you'll find that you get like repeated failures over and over. And then your numbers start to shift. consider 52 weeks in the year, and if we're supposed to close inside the box 70% of those 52 weeks out of the year, what about the rest of those weeks? And it really isn't 52 weeks anyways, right? Because we don't count holiday weeks and we don't count broken link weeks, which is going to be at least the 4 triple witchings. So that probably knocks it down to like 48 weeks, maybe 46 weeks. This week's range looks a lot like last week's range. They didn't price in more volatility. They didn't unwind any volatility. It looks a lot like last week's range. Last week was pretty volatile, all things considered. A hurry up and wait scenario. That's what it looks like we're doing at this point, right? Hurry up and wait. That's my base case going into tomorrow's data, is that we don't do anything today. But I pointed out at the beginning of all of this that the data for tomorrow, it looks in line, right? No change one way or the other. And the market could decide, well, screw it. If it's just the same numbers as we've been getting and there's no change, then why wait? So that's the concern, right? Is that we're supposed to be hurry up and wait for tomorrow, but the market just might say forget it and do it anyways. If we break out or break down, then the market said screw it, we ain't waiting. All right, so we're a little red, but if you look at the things that are down, the benchmark being 0.5%, we got Mag 7, generic tech, jets, chips, finance, and the Mag 7 down volume is down. It was up 5.5% over a 5-day period, so maybe it's just giving a little back. The rest of them, they're not down enough, right? KRE, KBE, they're close. So, that's more the banks instead of just generic tech XLF. Looking at what's up this morning, what's Bitcoin, China, metals and mining, more China, precious metals, or at least the miners, and VIX. As long as the VIX continues to try to unwind that gap, then the ES should not fall lower. But all it has to do here is stop falling. It doesn't even have to go up, just stop falling. And I think that's going to hamper any sort of rally in the S&P. Right now, the VIX is outside of last week's range and certainly Thursday and Friday's range. If we get back inside of it, that should be enough to get the ES back into the mid to high point of yesterday's price. But I can't see the S&P breaking out on any sort of a rally unless we get below, say, $15. Maybe 15.25, but I think it'd be more like $15. So we just need more out of the VIX than this. This isn't going to be enough, right? That little bit of a fade. It's got some work to do. And things should act different when it comes to this VIX once the SPX is open at 9:30, since those options are going to more directly correlate. All right, so it's a pretty simple morning, all things considered. We got a large expansion. Most of the market's going to have this sort of expansion, right? Like 60 to 80% of all the market's going to have that really big bar from Friday. GTFO out of that bar. We're inside day. This is the big range. Even our own Globex range, if we want to get back to the top of our own Globex, we got a lot of work to do to get back up there, right? So you got the 786 to deal with, the halfback. And as you can see, we're already through the 786. We need to keep that. Getting back down below 786 puts 69.50 back on the table. Then the inside day breakout continues. So simple enough, this looks like a hurry up and wait day. Without any sort of news or catalyst that can get us back to yesterday's high and get us any sort of an inside day breakout to the upside, just getting back up there should be the challenge of the day. It'd be putting in a lot of work. The midpoint is going to be the struggle area, 69.80. Look for a continuation on the breakout if we actually get it. I'm going to be playing a reversal back inside the box. So if we break out to the downside, I'm going to try to bring it back in. If we break out of the upside, I'm going to try to bring it back in because I don't see any reason that we should be going anywhere. Short and simple and sweet, yeah? All right, guys, it's all focused on tomorrow, so keep your eye on the news. Be careful, be safe. I'll see y'all tomorrow.